All right, folks, welcome back. It's September 25th, 2025. This is Focus on Forex. We're looking at dollar index, fiber, EurUsd, and cable, pound dollar. Well, lo and behold, look at that. So I mentioned last week that I was bullish on dollar unless we were to trade below the daily consequent encroachment of this inversion fair value gap that was given to you before the actual formation of it. So it's kind of like, one more time proving authorship. The nice rally off of that we've had the last 2 days has traded above the premium wick in here, above the gap in here, and then up into these highs here. Okay, so I'm going to show you two of them that you need to have on your chart. The first one, when we were down here and trading up, it's always, this swing high. It's, you got to look at that, obviously. But this high has the longest wick. So it's a premium wick. So you're going to put your gradient levels on that from the candlestick open to the high. That's what's on here. And let me just toss it in real quick. There's really no reason to worry about whether you should draw the fib from the low to the high or the high down to the low when you're doing gradient levels on the wicks. It's not imperative because you're simply looking at where those quadrant levels are, not so much the importance of whether they're 0.75, or 0.25. It's irrelevant. You're just looking at the placement of it, where it is in proximity to what the price is doing. Okay, so on the right-hand side, we have the 5-minute chart. Again, the left-hand side is the daily chart. And at midnight, price is consolidating and traded on the low at 97.786. That's this here. It's the low of this premium wick. So we opened, traded down, had a little bit of a Judas swing, and then we found some support right at that level again here. London Open kind of was like really not all that eventful, but no, the New York session, New York Open, had a lot of animation. We had a breakaway gap in here, just kept on ripping higher, and then we have a fair value gap there, right on the lower quadrant of this premium wick. That's this level right here. Fair value gap right at the quadrant level, another little fair value gap so you can get in a pyramid, okay, and then rallies strongly off of that. Which creates a retracement lower, fair value gap, and then we have a volume imbalance. It's really tight to see it in here, but in your chart you'll be able to see it easily. The buyers respect the bullish fair value gap here. We have a measuring gap that stays open. So breakaway, measuring gap, and then fair value gap, bullish breaker. So I have a swing low here and a lower low. So that high here, bullish breaker, trades into it here, bullish fair value gap, rallies through, bullish fair value gap once more, trades up to the lower quadrant of 98.456. That's this level here. That's the lower quadrant of this premium wick. So again, you want to take your time, review what these price levels are in relationship to what wick, and then look at where we're at over here. We accumulate around that 98.456 level there and trades higher. And I just included all this price action because it just kept going further beyond the normal London close time period. London close it's an extended window of time. Goes from 10 o'clock in the morning Eastern time to as much as 1 o'clock in the afternoon. That's kind of like the latest portion in the day of the New York session, PM session, that I'd be concerned about. So obviously it goes a little bit further than that today because it's such a big blow off type run. So we're reaching for the buy side here in the upper half of that premium wick, and then we'll look at this one in a moment. So now I have the fib ran across this premium wick, and these levels here, you can see, are much more pertinent once we get into the 98.24.5 level. That's this here. Look how the buyer respects it there. The candlesticks are respecting that level there. And we drew right back down into that. So we have upper quadrant there, which will be that, and then the high. So what are these right here? relative equal highs, right? Isn't qualified by having a lower one to the right than that one here? Yes. So buy side sitting at 9873.3. That's in striking distance for dollar index. All right, euro dollar. This baby just fell right out of bed, didn't it? Inversion fair value gap, we covered that the other day. Then we have a gap here, which is a bullish fair value gap. I'm not going to change the color in this because I don't want to confuse you with these two here. But this changes its state to a premium array. So it's going to be what? It changes from a BISI that would be bullish once it trades down into it like it did here. But if it trades down through it like it did yesterday, this becomes an inversion fair value gap. Okay, so it's going to act as a reversal of what we expected. And no, that's not my smoke detector in case you heard that beep, beep, beep. I have a perimeter alarm that lets me know when my puppies are trying to get into an area of the house I don't want them in and the batteries are dying, so I got to change them. All right, so the market creates this run up into here. London kill zone, again, like in dollar index, was kind of like lethargic, wasn't doing all that much. And then New York session, we came alive. We had a breakaway gap, bearish fair value gap. We trade up into that. There's your Judas swing during the New York session. Break lower. Order block that's bearish, changing the state of delivery. These candlesticks here that open. Big precipitous drop. Lower, trades down into the discount wick of this candlestick here. You can see it at 1.16945. That's this level right here. And it creates a measuring gap and a breaker. So we have swing high, low, higher high. That's a bearish breaker. We trade up into it several times. Look at the wicks. This will allow to do the damage. And then we break lower. We have a small little fair value gap. That's not enough room for me to annotate, but it would be a bearish fair value gap there. And we have an inversion fair value gap there. Trades up into it there perfectly and then drops lower into the London close, trading below the low of that discount wick. Now I'm going to show you this discount wick where I believe that we may be requiring attention to. So these levels here, you want to have them on your chart as well. You can look at this one here, the longest one, lower, but don't disregard this one. It's important you have that one, okay? All right, pound dollar or cable, same thing here. We had a bearish fair value gap reclaimed, not reclaimed, delivered from yesterday. And then the discount wick here, and then we have a discount wick there. And then we have a bullish fair value gap that traded down into, and I put the gradient levels on the bullish fair value gap. So just to pay attention, what we're looking at over here. This is the daily range for today on Thursday. You can see how we traded up into the upper quadrant of this one here at 1.34650, right there. Fair value gap trades up and bodies respecting it, and it's also the lower quadrant of that count wick. We break lower after another return up in with that fair value gap. Then we have a breakaway gap. Fair value gap, trade up into it there, which is institutional order flow entry drill, and it happens to land directly on consequent encroachment of this discount wick. Breaks aggressively. Now we have a measuring gap about halfway what we're expecting to trade down to that bullish fair value gap over here. Trades into a SIBI, which is a bearish fair value gap there. Discount wick, graded that, trades up into that, shoots it with the wick only, not the body, into this bearish fair value gap. And we have a small little fair value gap there. Bodies respecting it. Wicks are allowed to trade outside of it. And then we have another little fair value gap there. Digs into that bullish fair value gap in blue. And then the bodies respect this fair value gap and then sells off and trades just short right before it gets to that little low down here. So it was like one tick or so away from that. That's very, very close for government work, right? So you can see how having an understanding of reading gaps that are viewed in your candlestick as a wick above or below a candlestick. Steve Nielsen did a lot of stuff writing about candlesticks and whatnot, and I do not subscribe to any of the stuff he wrote about. No disrespect to him, but well, if you're going to look at candlesticks, this is the real science behind it, because you can really read real institutional order flow, real order flow, and you don't need to worry about how many contracts somebody wants to buy or sell above or below the marketplace, because the number of those contracts absolutely has no bearing on where the market's going to go. Zero. It has zero bearing on how the market's going to go. You need to know where it's likely to reach for in a direction, and then look for key levels like this, like I'm teaching you here. Over the last 2 weeks, I've given you insights about reading price action that nobody on this planet has ever talked about. I mean, I've talked about it with with my kids, but I've never shared it to the degree that I'm doing here in the last 2 weeks. And you can see how it overlaps with my PD arrays, like perfectly. And by having that overlapping and confluence, it just makes the PD arrays stand out on your chart. And that means that you know which ones to use now going forward. All right, folks, I hope you enjoyed this one. I hope you got something out of it. And thank you for your continued interest. And I will talk to you again tomorrow, Lord willing. Until next time, be safe.